Hey traders, welcome to Charts and Coffee. Happy Monday, everybody. Hope everyone's doing well. Had a good restful weekend, and great to be back. We had a top tier outlook show yesterday. Fantastic questions. So you can find that back at the Simpler Trading YouTube channel as well as mine. But onward and upward, we're taking a look at a brand new week, one that has not a lot of data, but important data. So if we take a look at today is the sole day we get a reprieve from the scheduled high volatility, high volume events, aka hot zones. Pretty quiet on the economic data front. We go into Tuesday. A lot of data coming out of the ECB, but since we're going to hear from Lagarde later this week, since we have ECB monetary policy statement as well as the presser later this week, these will likely be reacted to, but in a subdued way. Look for mostly US dollar to move on those Tuesday hot zones coming out of Europe. Going into the remainder of Tuesday, again, pretty quiet. We've got flash manufacturing at 9:45. Quirky time for a hot zone release. Usually they're 8:30 and 10. So just heads up for that on Tuesday. But what I really want to get to is Powell is speaking after the close on Wednesday. And then we've got GDP, advanced GDP on Thursday. And then we've got PCE as well on Friday. Now, in terms of the most important macroeconomic data that we are watching as traders, as far as tracking what the Federal Reserve will think and say and do, PCE is the most important inflation gauge for the Federal Reserve, not CPI. While ISM data and PMI data are part of that inflation conversation, the one that the data release that factors into the models that the Federal Reserve uses to determine whether or not they've got inflation under control is that one on Friday coming out at 8:30. So again, not a lot of data this week, but pretty important releases. So let's keep an eye on that economic calendar. Now, that doesn't include what's coming up from an earnings perspective. And typically when I'm looking at earnings, I'm really focused not on necessarily playing earnings. I'm not a fan of that. It's not something that's built into my approach to the markets. However, it's important to keep an eye on what is happening with earnings, because a very small number of stocks dictate where the broader markets go. And in this week's top tier outlook, which will be out later on this afternoon, probably around lunchtime, I'll be discussing what 6 stocks are moving the market, which 5 sectors we're supposed to look at the most for bullishness, and why that is so indicative of just the behavior of modern day markets, which is to say, do I care about all 500 stocks in the S&P? Do I care about all 100 stocks in the NASDAQ? No. I actually only care about roughly 6 to 7 stocks in each one of the indices. And ultimately, when we have the kind of movement in just a small number of stocks that have high concentration weighted, impact, when those stocks have earnings, look out. That's why it really only matters a very curated list of weighted stocks. And it's roughly, if you look at the top 2 to 6 stocks in each sector and index, you'll see where the weighting is and why usually 80% of the stocks in an average really don't move the average. And really, that's just exacerbated during earnings season. So that's what we've got going on so far this morning. And as always, we're taking a look at what's going on in the futures markets. We're taking a look at what's going on in the related sectors and indices and individual stocks. And really, despite last week's sell-off, and I know a lot of us saw what this last week did to equities, it's really been impacting those most shaky indices already. Russell's been in a downtrend, right? The Dow's been having a hard time gaining traction because its number one weighted sector, XLF, is still below the 200 period exponential moving average. So there are reasons when you look at the Dow and say moving lower or not, that's pretty much the path of least resistance. It's the Nasdaq that's the most interesting. And when I'm looking at relative outperformance, it is in tech, it is in the Nasdaq. And so the sell-off there is actually far more useful than, say, the sell-off in the Russell, where I would expect continued downside because the structure of it since the end of September has been in a downtrend. And then you take a look at the high concentration weighting at the sector level, and here's KRE again. So as long as you're understanding the composition of these indices and how few sectors and stocks really do impact where that broad group of stocks go, it makes perfect sense as to why we want to keep an eye on the Nasdaq. And then if I want to be a bear, you might say, oh, Karag, you seem to be skewed towards bullishness. Q4 is a bullish time of year. Not for everything, but especially as we go into the end of the year, strength gets stronger, weakness gets weaker, everything becomes more exaggerated. This is not the season for finding the bargain hunting in a downtrend. That's Q1. Q4 is what's the relative outperformer and how can I build a larger position in those names? And those names are largely going to be tech names. Even though they had an ugly week, they're still, generally speaking, in the bullish hemisphere. All right. So let's get to it. What's going to be the plan for this week? I do want to focus on some short-term swings. That's going to be some 1 hour setups. So let's see what we ultimately get. I know where I'm looking. It's going to be tech and it's going to be energy, by the way. So if you're wondering, okay, Rob, where are you bullish? Tech and energy. Where am I bearish? Mostly Russell, financials, and even now with last week's sell-off, even potentially the Dow. The XLF sector is going to be far better a place to look than necessarily the Dow. But even healthcare, which up till now has had a pretty good quarter to date, even healthcare is struggling. When you take a look at the top 5, 6 sectors quarter to date, which is to say October, it's names like XLE, XOP, OIH, XLC, XLK, and XLV has been a quirky symbol. That healthcare has been a quirky one that's been hanging up in there. But as long as the Dow is struggling, XLV is going to have to work overtime just to keep up any kind of support, any kind of strength. But that being said, we know what we're looking for, and we'll continue to focus on those energy and tech corners of the market. So then the next layer is, once I know where I'm looking, how do I want to tackle that? So this boils down then to time frame. Everything I've said so far really does map to a daily time frame, and really now to the end of the year. But what about today? What I'm going to do today is going to be highly dictated by what we see on a 5-minute, at least I should say this morning, is going to be dictated by the 5-minute time frame. What is it that the 5-minute is telling me the current market structure is? And when I look at all, and I'm looking at my charts here, when I look at all the different indices, when I'm looking at the Dow, the S&P, the Russell, what I can see here is that we have a neutral market trend on the 5-minute time frame. So take a look at the chart to the far left on my screen, and you'll see on that 5-minute time frame, the very bottom of it are 2 rows of colors. When that lower row is yellow, that's sideways, that's non-trending, and that's a neutral environment where I can be bullish or bearish. But based on what I'm seeing on the daily time frame, I would, for the most part, kick off the morning more in a neutral to bearish outlook. This includes the Nasdaq, this includes the Russell, and this includes the Dow. And I'll have to keep that outlook until we cross the threshold back to where I could be neutral bullish, which we are nowhere near right now. So I'm going to start off the morning. What am I looking at to kick off the morning? Yeah, I'm mostly looking neutral to bearish on the indices. All right, Larry asked, do I like the healthcare sector and in particular Amgen. I do not like the healthcare sector overall because, well, let me show you what I've got here, Larry. This is how I would divvy it up. Take a look here. I know this is a kind of busy looking chart, and let me just take me out of the picture so you can see the whole thing. All right. So what this is something I call a multi-chart. It's just a flexi grid in the Thinkorswim platform. And Larry, what it tells me is what the broader sector, that's in the larger upper left-hand corner, that's the chart, and then what the individual stocks weighted in order are doing. Take a look at how much, as we like to call it, double red there is. Now, what's double red? The first color in the trade flag is the indication of momentum. So this is momentum, right? That's momentum. It even says Momo, right? The second one is trend. Look at how many red momentum, red trend, red momentum, red trend. It's pretty much dominated by that. So when I take a look at the top 11 names, I can find 3 out of the 11 are uptrends, 1 is neutral, and the rest, look at this, are downtrends, right? The rest are downtrends. It's hard to like a sector when it's this mixed a picture and this many stocks weighted within it are going in different directions. So there's 2 ways of looking at relative performance. I think a lot of traders look at relative performance from what's the strongest amongst everything, right? What we want to think about is what's the strongest in XLV, and we can have strength outperformers. We can have weakness outperformers, right? So if you're looking to be short healthcare, there's no lack of choices. If you're looking to be long healthcare, see, this is what a lot of traders do. A lot of traders will look at Johnson & Johnson and look at this as being on sale, right? Oh, it's a great name. What does that even mean, right? It's a great name and it's so cheap. Okay. That's the first step to the pitfall of the fallacy of just buy something cheap. Cheap would be, and I don't even like the word cheap. I want to find something on sale. And I want to presume that something on sale already has value to me. So it's something I want that's now on sale. Something I want to be long in would be limited to 3 names: UNH, Lilly, and Amgen. So yeah, I like Amgen, Larry. But to get to Amgen, to get to that decision, I've got to look at who Amgen's hanging out with, right? I've got to look at that collection of stocks and then have Amgen rise to the surface because it's an outperformer, right? And it's a relative outperformer. And I think that words gets repeated a lot, but we seldom stop to say, well, what's the relative part actually mean? Relative to what? A technical scan? Relative to the stocks I typically look at? Or relative to the weighting under which the market actually moves, right? So Amgen's a yes, but so is Lilly, so is UNH. And now instantly you've got 2 watch lists, right? We never want 1 watch list, especially in a situation like XLV. What's my most bullish set of names and what's my most bearish set of names? And that's the way that I'll look at XLV. And then if I take it another step out, who is XLV going to most impact at the index level? It's going to impact mostly the Dow, and then secondarily the S&P. So that's where that healthcare weighting impacts the indices. So good stuff. And yes, I do like Amgen, and then you can see why the other 2 would be there too. And by the way, is Amgen going to need some help? I mean, does Amgen want to be the only, relatively speaking, low-weighted stock moving higher in XLV? It's probably going to help Amgen if Lilly and UNH continue to move higher too. So that trio of stocks at least can support each other. If I'm a bear and I want to short Merck or Pfizer or Thermo or Abbott or Danaher or Bristol Myers, I want to see Johnson & Johnson continue to lead the path lower, right? Why Johnson and Johnson? Number 2 weighted name. So if Amgen wants to keep moving higher, UNH should help, right? But overall, healthcare is a mess because your number 1 and number 2 weighted stock are doing such distinctly different things. All right. Anthony asks, ahead of the PCE, could we see a limited short squeeze this week because of profit taking and repositioning trades? So Anthony, this is, it's so funny you mentioned that, and I'm glad you did. I look at what I want to do, not based on a predictive, right? So Anthony, and thank you for the question, but do you think anyone actually knows what's going to happen this week? And that's always what I ask myself. Rog, am I confusing the value of a pattern, which I'm only going to know after the bell, or if I'm trading futures, I'll know when I start looking at the time frame I'm looking at. But am I going to ignore the value of a pattern, the familiarity of price, volume, volatility, time, and fall for the allure of prediction, right? And the moment I start saying, well, this is what's going to happen this week, this is what's going to happen in 6 months, I know I'm actually zigging when I should be zagging. I know I'm falling for the allure of something that I know no one can do. Nobody knows, right, what's going to happen. So I don't know. But Anthony, if that's a hypothesis I have, rather than if I sit here and say, yes, there'll be a short squeeze, how ridiculous of me to say, right? That means I know what's going to happen in the future. So now I ask myself, what if that's sort of the trade story? What if that's the hypothesis? What if that's sort of where I see some of my patterns mapping to, which I can't tell you is the case or not. I would say it's probably more likely in the NASDAQ, not because I'm predicting a short squeeze, but because it's a neutral market still above the 200, sitting at some support levels. But even though that's a possibility, what do I need to see on a 1 hour or the daily or the 5 minute to actually set that idea up, right? So I think a lot of us want to start off with a story, but as long as we stick with understanding it's a story and not a prediction, I think we'll be fine. So Anthony, I don't know, and frankly, nobody does, right? But what we do need to know is if that were to be true, what has to happen? Right? What has to happen? So I hope that helps. And I think that's a really great question, because I think a lot of people are wondering after last week's sell-off, was it overdone? Right? Was there too much bearish momentum? Too much, right? As if I know that as well. But was there so much bearish momentum that it's going to start to entice some buyers? Then I have to ask myself, where would it entice some buyers? Right? So if I'm thinking short squeeze, I'm going to go right back to my favorite, which we already mentioned, sectors and symbols, and say, all right, these relative outperformers that got hit really hard with last week's sell-off, are they still at levels that are going to entice buyers? And then what would that look like? That's trading, right? And yet, if you turn on the television, and most analysis is all about, well, this is where the markets are going, right? And that's like me saying that yesterday's Eagles-Dolphins game was going to end 31-17 with 11 penalties called on the Dolphins and 0 called on the Eagles, right? No way to know. Who knew? Who knew? All right. Rainy Day says, I will be joining Sector Secrets. Anything I can do to prepare? Rainy Days. There's nothing you actually have to do, because the moment you enter the Sector Secrets room, you will be given a number of resources and videos and things that you can begin to familiarize yourself with. It's a process, right? So there's nothing really you have to do, or frankly, go buy, because once you're in the room, we're going to give you the tools you need. So it's not as if you join the room and now you got to go buy some indicator, you got to go buy something. In fact, I give you all the indicators that we use for the bulk of the decisions we make: day trading, swing trading, and our position portfolio. The top tier outlook is actually included as well. So you've got this big picture report that comes out once a week. So what you need is included. And that is very much by design, so that on day one, yes, there is that learning curve, but I think we've smoothed out a lot of it, because you've got layouts ready to go. You've got reports you can catch up on. You've got 2 videos per week that you can watch to keep tabs of what's going on. So that is what we've got going on. All right. As always, thank you so much for being here, for Charts and Coffee. We'll be back at it on tomorrow, Tuesday. Just a quick heads up, gang. There will not be Charts and Coffee on Wednesday. Just a quick heads up. But I'll see you tomorrow, same time, same station. All right, gang? Be good to each other. I'll talk with you then.